Anders, it's Friday again, and it's been a really busy week. We had the Fed's Jerome Powell, who spoke yesterday. He said, proceed carefully. What can we expect from the Fed going forward?
Well, we've had a lot of communication from Fed this week, and the message is very much that they can proceed carefully. So I don't think we should expect a rate hike in 1st of November. There could be another hike in December or January, but now I think Fed are fairly comfortable. Market interest rates are doing part of their job, so the US 10-year is fairly high, and this will obviously dampen activity in the US. While it seems like the US economy is really resilient, we had very strong retail sales numbers, the labor market has remained robust, so it seems like the US actually can live with this tight monetary policy without getting into a recession. So the soft landing scenario for the US, I think, remains the main scenario.
Last week's attack on Israel and the subsequent military actions in Gaza this week. We had a significant visit by US President Joe Biden. How do you see that translating into the macroeconomics going forward here?
Well, I think to start with, it's very early to say. This is probably going to be a fairly long and complicated military operation. I noted that General Petraeus took the example of the US action in Mosul, which actually dragged out on to 9 months. And this is a fairly large city, and urban warfare is complicated, particularly given that you don't want to see civilian casualties. So Israel is probably going to start a fairly large military operation, and that is probably going to go on for some time. I'm not that convinced that it will have a major macroeconomic consequence. I don't think that we will see an oil embargo from Saudi Arabia, and therefore I don't think we will have a major price increase on oil. That it is not in Saudi's interest to really support Hamas with their strong links to Iran and other extremist groups. So I think Egypt and Saudi is staying on the sidelines, so therefore I don't see a big impact on oil. I don't think Iran, Syria and Hezbollah is able to scale this up to a broader regional conflict. So I think the main scenario so far is that it's mainly a really large political event rather than a major economic event. But as I said, this is likely to be a fairly prolonged military operation, so it's too early to really have any strong conclusions.
And then we have Q3 report season has started, and we had some mixed reports so far from Sweden. We have 40% of the S&P coming next week. In Sweden, how do you see that?
Well, first of all, we need to see the next week of S&P 500 reports. The last season, Alphabet, Meta, Google, Amazon, all of these guys were reporting fairly strong, even with this lackluster environment. So if they can repeat that, and also depending obviously on what type of forward guidance they are given, maybe the Q3 report season will come down as moderately positive. But obviously the markets are very worried because even with fairly strong reports, this very high 10-year bond yield is a kind of problem given where valuations are. So it's a little bit of a balance between reports and on the other hand the 10-year yield, and we really need to see some kind of new equilibrium before the stock market gets a really solid footing. But on the other hand, I mean, if we all have the long perspective, stocks remain the best option. If we just remember that during the last 4 or 5 decades, S&P 500 has performed also with higher interest yields, but obviously this is an adjustment that will have to go through the economy, and it is a fairly complex process. But fundamentally, I still believe that stocks are a very good alternative.
Great. Thank you for those perspectives.
Thank you very much.